Hey everyone, just to give you guys an update on what's gonna happen for this week. This is gonna be our weekly market outlook, and let's take a look at last week's number. A couple of interesting developments here, especially from the US side. Obviously, we have the final GDP numbers, a lot higher than the preliminary numbers. We got 3.8%. The unemployment claims was also down, which is a good positive for the US economy. And then we have the PCE numbers here. Now, the breakdown that's actually interesting was actually on the PCE numbers. We've got income not dropping, but spending continues to go up. So kind of go against on what we have in terms of the labor data. If we have that weak labor data, then we would actually have a lower spending as well as a lower income, which is not reflected on the PCE numbers here. So that's actually very interesting to look out for. All right. So for this week, obviously a couple of interesting things, apart from the NFP numbers and the unemployment rate that the market is waiting for, is that there's actually a potential for the US government shutdown if the bill didn't get passed on Tuesday to extend the debt ceiling. Now, obviously, from experience, this doesn't last very long. So even if there is a government shutdown, the bill will eventually get passed on. And we have seen this every year for the past 14 years from the US. I think the longest government shutdown was about 14 days. But what's really interesting here, again, from past experience, when that happens, obviously the NFE numbers get pushed back behind as well. So yeah, I think what we're looking at in the market here for a little bit of a softer US dollar is really more of that concern that a lot of traders wouldn't actually find out what the labor number is because of that government shutdown, and it's not really a matter of whether or not the debt ceiling is going to get extended. Considering the majority of the government is now Republican in Congress, this is going to get passed. So I don't think that's actually going to be an issue at all for the US economy. All right, let's move on to the technical levels here, and this is for the Aussie USD, relatively stable. Not expecting any surprises from the RBA tomorrow with their interest rate decision. Expecting to hold tomorrow, and we're expecting the range to remain between 0.65 to 0.67 for the Aussie here. And right now, price is kind of trying to bounce off that 65 level there. But yeah, this is going to be a relatively stable currency. Price is still above the Ichimoku cloud. No changes in terms of how we view the Aussie here. This is just going to be stuck in a sideways range bound market condition, considering how stable it is for the past, few months here. Range has gone up. I mean, the key levels has gone up. It's now 65 to 67. That was a tad higher from that 64, 66 range that we had in the Aussie there for a couple of months. Right, next as the euro, this is actually stuck between the order blocks that we have here. We have a support basically around 1.16 to 1.1650. At the same time, we have resistance coming in at 1.18 to 1.1850. This is going to be in that 2 cents range there. Very similar to the Aussies between the 65, 67. This is going to be between 1.16 to 1.18. Now, the sterling a little bit weaker. Overall, we're not looking at any indication of any significant trend change as of yet. But do note that price is actually below the Ichimoku cloud at this point in time. I think one of the key resistance to watch out for on the sterling here is actually 1.35. If it fails at 1.35, then it will actually fail at the Ichimoku cloud again. That could send the sterling down. And in terms of the support, we're going to be looking at 1.3350. Below 1.3350, we got 1.33. But ultimately, if these levels are gone, I think we should be watching out for the support one on the weekly. If we lose that support one on the weekly, which is 1.33, that could actually open up further drop to the downside towards 1.32 on the sterling. On the flip side, if it does manage to overcome 1.35, then we're likely going to be heading a little bit higher towards the order block above. That's going to be closer to about 1.3625. That's also where the resistance 2 is located on the weekly pivot. And lastly, we have the Dow Japanese Yen. Dow Japanese Yen, very stable. right? Still above that Ichimoku cloud, still above that resistance support trend that we have here, breaking about the zone around 149 last week. Right now, this is currently where price is, which is still hovering around the 149 level. I think the key support to watch out for this week is basically where the support one on the weekly pivot is located. That's where the Ichimoku cloud is located. That's also where the support trend line is going to be located. That's going to be around 148. That would prove to be a very strong support level for the dollar Japanese yen. Ultimately, though, even if this managed to bounce off and grind higher, we're still going to be looking at that 151 resistance level, which is that high in March, April, before the whole tariff issues from Trump. We could be back testing those levels. But until those levels break, we're not going to be anticipating further progress on the dollar Japanese yen as of yet. So from a technical standpoint, this one here is still well supported. We have strong support at the Ichimoku cloud. We have a lot of confluences with these support one on the weekly, as well as the Ichimoku cloud, as well as the support trend line that we have there. Basically all clustering around the 148. So I do expect 148 to potentially be a stronger support level for the dollar Japanese yen. In terms of resistances, I don't think 149 is a resistance. We are going to be looking at 150 towards 159 as our next resistance on the dollar Japanese yen. All right, so with that, good luck to trades, and I'll see you soon.